Jared, it's good to chat with you again. I mean, what the heck? I just don't listen. I get it. The Snap numbers weren't good. The outlook wasn't great. They're talking about hiring, but we did a segment on market structure last week, and when I look at a stock like this down 30% in a matter of hours, it's something it's weird.
Yeah, good morning, Brian. The weird is it's an understatement, and the single name stock volatility that we're seeing here over the last few months is it's pretty epic any way you slice it. I mean, listen, the rate of deceleration in Snap's core business it's pretty shocking. I mean, put things in perspective. Snap just guided about 4 weeks ago, so to have this kind of deceleration in just a 4-week period is pretty significant. I mean, if we take a step back. Last night Snap talked about the macroeconomic environment deteriorating even further and faster than anticipated. And what's super interesting is that when you look at the construct of their guidance for the June quarter, they guided revenues to grow 20 to 25% year on year. But what's more important is that through April 21st, which was the day they guided earnings, or the day they reported earnings, revenue was actually growing 30% year on year. So for Snap to come in below the low end of that guide, May and June are growing just 10 to 15% year on year. So the growth rate's collapsing by just 50% in less than 30 days.
Okay, so there's two ways to look at it. The fact that in 30 days' time, they went from guiding one thing to missing the guidance they just gave 4 weeks ago, which means they've got not a lot of visibility into their business. But they are still growing, right, Jared? I mean, you said the growth rate is slowing. They're not contracting. There is still growth, and yet the stock is losing 1/3 of its value right now.
Yeah, but I mean, so, for Snap, you're, as an investment case, you're underwriting they are exposed to the best demographic from an advertiser's perspective, just given that, that 18 to 34-year-old cohort. So they're expected to be growing. But it's all about rate of change. So to be growing from 30% to just an exit rate of 10% by the end of the quarter, the stock was certainly priced for something significantly north of that. To help put in perspective, Snap was trading at a high single-digit multiple of revenues. You've got Facebook Meta, which was trading at 7 times EBITDA. So I think at this point, it's shoot first, ask questions later. And we don't have a ton of information on what really is driving that core deterioration in the business. And it's just even more perplexing because if you look at earnings reports over the last week or so, including from a competitor or, maybe not necessarily a competitor, but someone in the online ad ecosystem like the Trade Desk, TTD reported about 13 days ago, they beat the quarter and they got it in line. So I think there are a lot of questions on what actually is happening within the online ad ecosystem, and we don't have a ton of color from Snap. Is it competition? Is it Apple privacy? Is it all macro? So there are more questions than answers, unfortunately, this morning, which is why I think you're seeing that overreaction on the downside.
Well, let's see if it is an overreaction. I mean, right now you got Pinterest down 13%. Obviously, to your point, Jared, is sort of sell now and ask questions later. We shall see. Snap down 30% right now. Jared Weisfeld of Jefferies. Really appreciate your time, Jared. Have a great day. Thank you very much.